Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin. But before I talk about Elliott wave theory, let's keep it simple, talk about support resistance on the monthly time frame. You can see I have two boxes on my chart. The upper one here is between 48 to 53.3k and the one below 30k to 33k. We have found support so far on the upper support box. It's been an important support resistance area in the past as well. Resistance, support, resistance, support, resistance, resistance over here, and now again support. If we take out the low here at about 49k, it's not necessarily a problem. It becomes a problem if we then lose it, retest, and change the structure. That is something you don't like to see, and that is also what happened over here in the past. Then the probabilities increase to move to the lower 30Ks. What we would like to see if we do lose 49K is to lose it, find resistance, higher low, and then move back above it. Seeing consistent structure to the upside, preferably with some nice bullish CVDs on a 4-hour time frame, for example, for then continuation towards the upside. Now on a weekly time frame, it's interesting that we have a similar support resistance area based on volume. So you can see there's overlap between the monthly and this weekly support resistance area. Now on the weekly, I'm looking at this volume profile. I put the start and the end of the volume profile pool on my chart, as I got many questions about, yo, Koen, where did you get these levels from, right? What is the pool that you have? Because I can't seem to get the same levels. Now, first of all, I'm on the Coinbase chart. Every chart will have slightly different levels. And I pulled the volume profile from the 28th of December to the 9th of May, giving you this value area high, point of control, and also the value area low. And make sure that if you go to your settings, value area volume is on 70. Now what you can see is that these levels are very nicely respected. Over here we had resistance at the value area low, moved towards the upside to the value area high, found resistance here, support on the point of control before breaking out, and now price came back to the value area high. Nice reaction on the weekly time frame, and of course preferably we then move towards the upside, but that depends on the local structures. If we, however, look at the weekly time frame, then currently the highest probability scenario on the weekly time frame remains the bullish scenario. So far, the probabilities here remain higher that this structure is corrective, not impulsive. Now, what I mean with this is that we are looking for ABCs, WXYs, all that sort of stuff, corrective structures from an Elliott wave point of view, increasing probabilities to still look for higher prices in the future. If it was impulsive, then we are looking for a wave 1, 2, 1, 2, and a big wave 3 to the downside to much lower prices, easily moving down to the lower 30Ks. However, that at the moment has a lower probability on the daily time frame. On the weekly here, if we look at this impulsive structure, a 5-wave move, 1, 2, 3, 4, 5. Working on this 4 here, common target for 4 hit 236 to the 0.5, 57.1 to 42.8k. Invalidation is 37.7k. After wave 4, we want to see a 5 to the upside, meaning impulsive structures on the lower time frame, 5-wave moves, and then the target for your wave 5 here, 81k to 129k. Of course, that is a very big target area, but as we get more information, if price moves towards the upside, we can get a more accurate and smaller target area for 5. The daily target area will be a bit smaller. The 4-hour target is again a bit smaller, etc. Right? Now, your most bullish alternative scenario is a double 1-2, where this is a 1-2-1-2, and you just pump up in a very big 3. But let's first of all wait for price to eventually, at some time, then take out the all-time high, and then we can talk about potentially even more bullish scenarios. If we then go down to the 15-minute time frame, then price over here hit the 0.618. Now what you see on my chart, first of all, is a 5-wave structure to the downside and then a 3-wave ABC to the upside. Price then retraced to the 0.618 Fibonacci, taken from the low to the high of your wave C. Now the 0.618 is important because if we are looking for an impulse being a 1, 2, 3, 4, 5, the 0.618 is an invalidation for a wave 4. This therefore increases the probabilities that this is a 3-wave structure to the upside, and therefore it also increases the probabilities for price to sooner or later take out this low here at about 55.5k. The invalidation for this scenario is taking out the high at 59.8k. What the bulls like to see on a 15-minute time frame is now a diagonal or a multi 1-2. As explained, an impulse 1, 2, 3, 4, 5 doesn't work anymore because wave 4 retraced too deep. Now for a diagonal, you are then looking for wave 1, 2, 3, 4 and a 5 wave structure. However, it is way too early to start talking about diagonals. Still working on this wave 2, we still need a 3 and a 4, and preferably when the wave 4 is finished, that is when we can start talking about a diagonal. So at the moment, it doesn't have the highest probability. And then secondly, we have a multi 1-2, which means 1-2, 1-2 continuation to the upside. If you pull a fib from the first wave 2 to then the second wave 1 high, toggle on your wave 2 target area, you can see we have currently found support on the 786, which is one of the common target areas for a wave 2 and then 1-2, 1-2, and you want to see a big wave 3 to the upside. However, what impacts the probabilities for this scenario is that your second wave 1 here is much longer in price and also longer in time compared to your first wave 1. Now, why does this matter? It matters because of Elliott wave degrees. If we look at a multi 1-2, then preferably each next 1-2 of a lower degree in Elliott waves is a little bit shorter in time and price. Now that's preferably in an ideal world, that's what we get. Of course, that's not always true, but you then have a 1, a 2, a smaller 1, a smaller 2, smaller 1, smaller 2, and then eventually you move into your wave 3. Of course, it happens that a second wave 1 is longer, but from a probabilities perspective, preferably your lower degree Elliott wave counts are a little bit shorter in time and price. So the first one here is then labeled in green, your second one is then labeled in blue, and preferably your blue 1-2 is a little bit shorter in time and price. Again, it's not an invalidation, but it does impact the probabilities. And if price moves to the 886 on the chart here, then it also reduces the probabilities for this scenario. And the 886 here is sitting at 56.4k. So the moment this level is hit, it will also again even more significantly reduce probabilities for this particular scenario, and the invalidation is price taking out this particular low. If we then look at the CVD divergences, then you can see that at the highs here we were creating bearish CVD divergences, and then price moved towards the downside, very nice, continuing to create bearish CVD divergences here as well. Now you can see that we have bullish CVD divergences, but these for me are not interesting. What I want to see to support the bulls for a move towards the upside is more locally a structure to the upside, higher highs and higher lows, and create brand new CVD divergences here on the right side. That is something that I would like to see to switch bullish, which at the moment is something that we do not see on the chart. Now we also have some news today here. Today is Thursday, September 5th, 4 p.m. Central European Time. We have some news. Also be mindful of tomorrow, Friday, 2:30 p.m. Central European Time. There is some news, so it might increase the volatility. Therefore, please trade safe. And if we then finally look at the probabilities of the different scenarios, then currently on the weekly time frame, the probabilities remain higher for a bullish scenario, an impulse to the upside compared to the bearish scenarios, but more locally here on a 15-minute time frame, the probabilities are higher for price to take out this low here. So for the bears compared to the bulls, because the multi 1-2 has a lower probability as explained, as well as a diagonal, it is too early. And what we like to see for at least a sign of strength, if we do want to switch to the bullish case, would be for price to change market structure locally, continuous higher highs, higher lows, supported with bullish CVDs or other tools that you like to use, flipping resistance into support and whatnot. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.